Do you think that the Fed should open the possibility of hiking rates again?
Well, it's not my base case, but I think the probability on that is rising slightly here. This wasn't that radical of a data release here, but I do think that possibility is rising. We really haven't made any progress on getting core PCE inflation down, let's say over the last year. I think the man on the street would look at those numbers and say, no, it's basically been flat for the last year.
Jim, one thing we've heard repeatedly from some economists is this labour market's just not as tight as it was. And because it's not, that dampens down the potential for second-round effects from the inflationary kick-up that you get from tariffs. What would you say back to that? How fertile do you think this environment is for second-round effects?
I don't know. Come on. Unemployment insurance claims, ridiculously low. That's your best week-to-week indicator. Unemployment rates, if anything, is probably below the natural rate for the U.S. economy, but certainly low by historical standards. I just don't see it right now. Now, there's fear of the future and what might happen. And we know that the last tariff war in 2018, 2019 did cause a slowdown in the economy, and that the Fed did react to that by lowering the policy rate. So we'll see if that history repeats itself here. So that it's the expectation that people might be thinking about. But as far as where the labor market is right now and whether that's disinflationary pressure coming from there, I don't think so.
Jim, can we have a best guess from you? Next move, cut or hike? What would your best guess be right now?
I still think the committee can stick to its baseline that there will be further cuts, but they're being pushed farther and farther out into the future. And now with a hotter core PCE year-over-year number, you might start pushing those out into 2026 instead of 2025. We'll see what the market does in the days ahead.